What is going on, guys? This is Student Investor. In today's video, I'm going to be talking a little bit about credit. Today's video is all about credit, so I'm going to be going over the basic things you should know about your Fico credit score, how to start building your credit, and what things you should really look out for when it comes to building your credit over the long term, and understand your underlying goals and objective when it comes to credit, because credit is a huge part of your personal finances, whether you like to think, whether you dislike it or not. Most people don't like credit, but it's actually very important. You're going to need it in the long term, and it's going to help you do things with your money that you can't otherwise do with just normal cash. And that's very important as a young investor, because the younger you build your credit, the better it's going to be for you. So understand that credit is not for everyone. I understand that, but I intend to make this video to educate you guys about the Fico credit score and take the steps necessary to maybe start a line of credit of your own and hopefully build credit over the long term. Before I go on and explain the Fico credit score, I'd like to thank you guys because the support has been immense. I've started this channel a couple months ago, maybe 4-5 months ago, with exactly 0 subscribers on the board, and if we look today, I have 115 subscribers. So it looks like the videos are doing some justice to the channel and you guys are liking the content that I'm putting out. So please like, comment, and subscribe. It really helps out the YouTube algorithm and pushes my video out to more people. And subscribe for that content, because I'm going to be pushing out a lot of content. I'm committed to the whole YouTube thing, so I am committed on passing on my knowledge to the younger generation and having them understand that investing is highly important and your personal finances is something you should be taken seriously. As why I'm making this video. So let's go ahead and explain the Fico credit score. So in America, we use the Fico credit score. It's a metric that we use to judge credit worthiness and whether or not we want to value that person's individualized credit on an individual basis, or whether it comes to like borrowing a loan, credit lines, everything that has to do with borrowing money. You could bet you're behind that it's going to be using the Fico credit score. And this is just a scoring that was instituted by a corporation named the Fair Isaac Corporation. Fico, they're actually a stock ticker that you can invest in. They're a real corporation. You could go look them up, but they basically set the standard for credit lending, credit worthiness. So Fico contains five subcategories that you really need to know, and they're each weighed differently by percentage. So some things will negatively or positively affect your credit more than others, and I'm going to be explaining that. And I want you guys to write this stuff down, and if you can't write this stuff down, I want you to draw this in your head that your Fico credit score is very important, because if you're planning to do anything of the likes of getting rental property in the future, or buying a house or a condo in the future of your own instead of renting and throwing your money away, subscribe for that video, because I'll be making a video comparing the benefits of owning versus renting. So if you're interested on that and you're like a young investor, like straight out of college, and you really want to get the stuff down with your personal finances, take it from me. I'm 21, I'm dedicated, I learn, and I'm learning every day, and I'm sharing my knowledge with you on YouTube. Now on the screen in front of me, you are seeing 5 categories, and I'm going to be going over each and every category and explaining its weighted and basically what the hell is it, because you probably are confused about how it works, blah blah blah. This is basically the 5 major factors that account for your Fico credit score. All these 5 subcategories in front of me is what make up your Fico credit score, and each, as you can see, are weighed differently than others by percentages. The first one is payment history. Guys, I cannot stress enough how important payment history is, and on-time payments are valued on your credit card. So if you're new to credit, try not to miss a payment, because if you miss a payment, that stays on your credit history forever, and that looks very bad, and that percentage will go down. So if I started like a credit card a year ago, and within that entire year, let's say like I started a credit card in 2021 and it's now 2022 suddenly, and I made like payments throughout that entire credit card history length, I did not close the account, that credit card is magically still open to this day, theoretically my payment history would be at 100%, And because that's 35% of my actual FICO credit score, that will look very positive on my credit history. So you could imagine if that was the biggest weighted category, or is the biggest weighted category on your FICO credit score, you can imagine how positively that looks for your credit score, and it's going to boost your score a lot. You don't want to impact the larger areas of your FICO credit score, so you really don't want to be messing up the big three. And the big three are payment history, accounts owed, and the length of credit history. So I think I got the whole payment history thing down. If you don't, this article is going to be linked down in the description, so if you want to just read on it instead of just listening to me talk about it, I encourage you to go down in the description, click the link, and learn more about it. Accounts owed is 30% of your entire FICO credit score. It's another major factor in accounting for your credit score, so you really don't want to mess this up. And this is the argument against college. So when you see people talk about why you shouldn't go to college and take out all these student loans, it's because it really negatively impacts your FICO credit score by a lot. Accounts owed is seen as you are a more risky borrower because you're taking on a lot of debt. And accounts owed could be anything from a mortgage, an auto loan, a personal loan, an outside loan that was instituted by like a certified lender in your state area. Even if it's co-signed by your parents or anything, if a loan has your name on it, or any type of loan credit line has your name on it, it's going under your credit history. So it's very important that you take care of that account. You make payments every single month when you can, and you don't incur things like late fees. You don't incur any interest by paying off your credit late, and you incur that interest when the cycle ends. Usually when I speak about cycles, I mean every month. So every month there's a credit cycle in which your credit will be evaluated and taken account for, and you could actually visually see your FICO credit score increase or decrease month over month. And I'll be showing you my FICO credit score history at the end of this video, so you could see month over month how it changes. Moral of the story is you basically don't want to get into too much debt, because if you have too much debt and it's 30% of your FICO credit score, and it's like, let's say you owe like 30-40 grand, it's gonna take a very, very long time to wipe that from your accounts owed, and it's gonna stay there until it's paid in full. You really need to take into account and understand the benefits of why you take out student loans, and understand that when you do take it out, it's a commitment, and you have to be also committed to paying the loan, because you're legally obligated to pay off the loan. So that is just one thing to take account for. Basically, don't overextend yourself with debt if you believe that later on in life you're going to be in a financial disadvantage and you don't think you could make the payments as you would normally would. The next category on the FICO credit score is the length of credit history. This is also an important one, and for you new credit lenders out there, or borrowers, or credit owners, credit card owners, length of history is a major factor as well. Don't close the first credit card that you ever gotten. I see people make this mistake all the time, where they get a new credit card and they first start building their credit, and then they want to close that card because there's a new card that's offering way better benefits, cashback bonuses, sign-up bonuses, statement bonuses after 3 months, 5 months, 6 months. Don't do that. Keep your first ever credit card open, and it's going to look very, very healthy for your FICO credit score, because that means you can maintain an account for a prolonged period of time, and you're not just jumping and creating new accounts year after year. You're actually maintaining one healthy account, a line of credit, and you're building that credit over time, because your credit score and your credit limit is going to increase over time because you're making payments on time, you're not accruing any interest or late fees, and when it comes time to take out a mortgage or personal loan, a lender is going to look at you and they're going to look through your credit history and they're going to be like, wow, this person really knows how to take care of a credit card. It looks like they've done a very good job handling their own credit, and their first ever account is still open, and they made on-time payments throughout that entire credit's length. So that's going to look very good. We're going to give you the mortgage, we're going to give you the loan. So that's the major three that you really have to focus about. The last two are really low weighted percentage categories, and you don't really need to worry about them, but I'm going to cover them anyway, so don't worry. So the last two categories making up the FICO credit score, obviously the more lower weighted categories, ones that you don't really have to worry too much about, because it's not gonna affect you until your credit history has gone beyond a point of like maybe 2 or 3 years. That's when you should really start focusing on these categories, when you could, and you really want to like extend your credit to the more good or excellent range. That's when you need to be focusing on that. So that's the part where I'm at this part where I would need a credit mixture to increase my credit worthiness, because it shows that I could handle multiple accounts of different debt types. So there is different debt types. There's that when you have a credit line, obviously, because that's credit, it's a debt. As you spend that money, you are going to accrue a debt. There's auto loans, mortgages, retail loans, installment loans, student loans, blah blah blah. So that's a credit mixture when you have different types of debt. So a credit card is a debt, a student loan is a debt. So most people are gonna have that mixture at the start, so it's not gonna affect you too much. But when you want to get to the 700 range, you're gonna have to really hone in and focus on that, and you might have to pick up an auto loan, you might have to pick up a personal loan, or you might have to open other credit cards. But so long as you stay disciplined, you already know how the FICO score works, and you're not overextending yourself half of the time, you're going to be just fine. New credit is basically saying it's just a category that literally punishes you for opening too many accounts or too many new lines of credit at a time. So let's say in a cycle you open 3 credit cards within the span of a month, your new credit is gonna show a red flag, and it's gonna drop your score by 10%, or it's gonna be kind of minuscule. But you really don't want to do that, because when it comes to borrowers, they're very picky and they look through each and every category. I mean, the major 3 are gonna obviously move and affect your FICO credit score the most. But for borrowers, they want you to be picture perfect, and they don't want to mess with any clients or any potential defaulters, and they don't want you to miss a payment or incur any late fees, because that looks bad on them. Rule of thumb, just don't open too many credit cards within a month, or in a year at that, because you shouldn't. Because when you start, you're just going to be focusing on one account, and that's how I started. I held my account for 1 year, and then after that 1 year, I decided that I wanted to move up and get other credit cards, and now I have 4 lines of credit that I juggle, and I maintain just fine. You're going to see my credit history at the end of this video, so stay tuned. Next, we're going to talk about FICO credit score scoring. So there's different categories and ratings. Obviously, when you start your credit journey, you're not going to have a very good FICO score. Obviously, you're going to build that up over time. Any score under 580 is considered poor. You're gonna be considered a risky borrower. It's below average. You really don't want to be at that range at all. Ideally, you want to start pushing towards the high 600s and the mid 750. That's kind of the sweet spot where you could start going to a mortgage broker confidently and potentially applying for a mortgage, a personal loan, or a bigger line of credit, and they will happily approve you because you're going to have a history at that point. The categories go after 580 to 669, which is the cutoff. That is the fair credit rating. So you're still below average, and it does say here many lenders will approve loans. That's not true. You really want to be in the good, very good, or excellent or exceptional range of credit, because like I said, borrowers are very picky, and they're going to want to do business with people that they trust not to default on their loans or mortgages, because that's how they make their money. They need you to maintain the loan over a period of time. So it's very good that you spend an entire year just focusing on building your credit, so you could get up to the good rating, the very good rating, or the exceptional or excellent range. So hopefully the FICO credit score wasn't too hard of a topic to grasp. Now on to credit cards. Where do I get started? How do I get my first credit card? This is the most exciting part. I love this part. So there is a thing out there called the secure credit card, and this is how I want all of you guys to start. All of you viewers that are watching this video, share this with your friends. Tell anybody that wants to start building a credit. This is definitely how you start building your credit. I recommend it. This is how I started. I'm going to show you and recommend the card that I actually use in my day-to-day wallet, and I'll show you that, and I'll also show you my scores and how you could see the day-to-day movement, I mean the month-to-month movement of how my FICO score increased over time. So a secured card is a type of credit card that is backed by cash. So basically, you're gonna put a cash deposit, and that's basically it's gonna be used as collateral. And based on the amount you put down, you could increase your credit limit, and it's basically going to tell the borrower that, hey, if I mess up, this is the cash, and I'm putting this cash on the line. So if I make a late payment, you could take this money away from me. But the idea is that you're not going to make a late payment, because after all that you know now, after watching this video, you are going to maintain a positive credit history. You aren't going to incur any late fees, and you're going to pay your credit card on time and before that bill is due. So if you do that, guess what? In 6 months, you're going to get your initial deposit back, and that's how I started. So it's very, very cool. I personally recommend the Capital One secured Mastercard. This is the one I use. This is the one I run in my day-to-day life. It's in my wallet, and as you can see, I'm not kidding. This is what I started with. Exactly the same one you see on screen. Platinum. It matches up. It's not fake. It's real. So that's what I started with. I started with a secure card. I still have that account open to this day, and it's been doing me very, very well. So that's how you start out. It's all you have to do. You get a secure card. It's going to be in the link in the description. So if you guys just want to go ahead and apply for the card, I'm only going to be recommending this card because it's the only one I trust. It's the only one I use. But with that being said, it's what's built my credit for an entire year, and it's still my daily driver. I still use it. I still make payments on it. I use it to pay my phone bill. It's been running great. No issues with the card at all. Zero annual holding fees, so you don't pay any extra money just for holding the card at the end of the year. And the interest on these things are very, very high, and that's the point I want to make. You don't want to incur interest on a new credit card, especially when you're building your credit, because you're just gonna be throwing away your money if you incur interest on the first place. So long as you pay your bill within a month. So let's say you do a purchase at the first of the month, don't wait until exactly the end of the month to make make a payment on your credit card. Please make the payment before the end of the month, so that way you don't incur any interest, because the second you hit the 25-day mark of your initial purchase, that's when you could start being charged interest. It's different for every credit card. That's just how it is for me, and that's how I'm just going to relay the information to you. So looking at the screen, this is my credit history. I started with 706. Most people aren't going to start like that, and I started this credit card last year, 2020, and I've been using the same exact card, the secure card, and I have obviously more accounts now, and I've been juggling more accounts and juggling different lines of credit, but there's still credit cards. I still have to pay them off. I still have to maintain them, and basically I was at 706, very happy with that. I was not expecting that at all, but the first month I did maintain that credit very well. And keep in mind, your FICO credit score is very, very volatile. So if you do certain things, if you carry a balance over to the cycle, the credit cycle, and when it gets accounted for, it could really move your credit up and down pretty quickly. So as you can see, exactly the next month over, I went down to 654 and just at average, and then I went up a couple points, 661, and then another month later 720, and now I'm very happy to announce that I've been staying in the 700 range for this year, and without any hiccups I've happened to stay in the 700 range throughout this entire time, and I am now pushing the excellent category in under a year. And that's all you have to do. You have to understand the FICO credit score, and you have to make on-time payments, and you don't utilize more than 15% of your credit line. So that's the beauty of the secure card. If you want a bigger starting credit line and you need to make certain payments, or you just want to do certain things with that credit, so long as you're responsible, go ahead and put more money down when it comes to your deposit, so you could have a bigger line of credit so you can make the purchases you want, so long as you're responsible, of course. So then the first month of this year, 727, then we go to 726, 734. I'm on the climb, then a drop down. Obviously credit is volatile, but I'm still in the 700 range. 720, next month over. 720, 729, next month over. 748, next month over. 751, 750, and now at the current day, the highest score to date recorded is 752 for me. That's where I stand right now, and it's been doing me pretty well. And as soon as I grasped the concept of credit, I've been building credit ever since. And my goal for credit is to basically apply for a mortgage one day and own some rental property. And that entire journey is going to be documented on the same YouTube channel. So guys, if you like the content, please subscribe, like, and please comment if you found this video helpful, or if you decided to make your move on credit and you decided to finally jump the boat and be one of the first people to, like, out of your friend group to start building credit. Because the earlier you build it and the earlier you grasp the concept, I'm telling you, it's gonna do you wonders in the long run. Guys, I'm the student investor. Keep on investing, make smart plays with your money, be financially smart, and always learn and grow with your finances and with your money. Guys, thank you for watching the video all through the end. I have merch now, so if you guys look in the description, I have an Amazon link down there. So if you guys want to support me directly and buy one of my t-shirts, I will greatly appreciate that.